Hello, everybody. It is Monday, 24th of April. Happy Monday, everyone. Hope you guys all had a great weekend. We did have the French election results came in. Markets gapped higher. Everybody's euphoric. Nothing wrong in the world. And let's buy. Let's buy the euro. Let's buy the S&P. Let's buy stocks. So I want to talk about gaps. This is Sunday night. So I want to talk about gap trades, gap opens. Well, how do you trade gap trades, gap opens? Well, couple things to think about, especially in the short term. Gap trades are tough to think about from the standpoint of when something gaps. You just have to continue the momentum. That becomes very challenging. There are markets where you will want to have that be the dominant side, but it becomes very challenging to just say, hey, I'm going to look at a market like the S&P 500, or I'm going to look at a market like the euro dollar, and it gapped higher, so clearly the direction is just going to continue to keep going. Let me start out with euro dollar here first and foremost, and think about what we see in euro dollar. So this is, just to give everybody a frame of reference, this is the Friday close, April 21st, and euro closes just around that 7:30. I think 7:28 was the close. So that's what we see with euro dollar on the close Friday, right? Not a ton of bullishness, but higher in kind of the middle of the range has been. It's been 106 to 109, so 7:28 right around the middle of that range. The French elections, we get this gap higher. And where does it gap? It opens. Now this is New Zealand trading. You have to understand most retail platforms are not open at this 3 o'clock hour. And this is bank trading. This is New Zealand. So most retail are not going to have the opportunity to deal at that hour. So where you get the retail open is at this 5 p.m. New York time. So this spot here above 109, that's where the market opens for most retail types. That doesn't mean it didn't trade there. It just means you didn't have the ability to deal with it. But what do you get, and what do you think? What do your thoughts become when you walk into a market that's gapped higher like this? Well, a couple things. One, if you came in short throughout the weekend, man, it's painful because you gapped higher. There's not a lot you can do about it other than look for the best dip to cover into if you're going to, in fact, cover. Secondly, if you're long, how do you want to treat it? Do you take profit? Do you let it run for as far as it's going to run? What do you do? Well, I like to look at it from the standpoint of kind of establish a new zone and say, what is it doing after the gap? Right? It's great to go back and look through and say, what is the market that I'm focused on actually doing? And to do that, I'll want to get a little bit of clarity of a longer term, especially if I'm going to focus on something in the short term. It's only going to give me such a picture. So just with a quick look, something that doesn't require very much time, probably more time to refresh my chart than to actually see where is euro dollar trading in reference to where it's been trading, what is real support resistance around here, and what you're able to recognize is over the last several months in euro dollar, you're at some of the better levels. You're challenging this 109 area as you walk in Friday night, and that's where, as you walk in Sunday night, U.S. time, and that's where you're sitting. So just a real quick look on something bigger than a short-term day time frame just will give us that look. Then going back to something a little quicker. This is where it makes sense to kind of give you an idea in the short term what you're looking at. So here's what we notice in the short term. You get your currency open, you get your New York open, but what's created here is simple, pretty technical in nature, which is that you have a level right around the 920, 935 area. The price can't trade back through. It cannot close back above it. It's challenged it twice and just simply can't get above it. So you now have a short-term resistance. You don't know whether it's going to hold on the day or it's going to give way, but you do know it's short-term resistance. So you can start to take reaction off that level as a key to future movement. And by that, I mean you start to get bottom edge action, top edge action. Top edge, what happens? Sellers hold it. Bottom edge, what happens? Sellers win it. So it's a very simple diagnosis of saying what's going on with the gap. Does it still hold the gap? Well, it holds the Friday close, no doubt. It doesn't hold the gap open lows. That part didn't hold. It holds the Friday close for sure. It hasn't gone down and filled the gap. A lot of traders will look for it to fill the gap, maybe not in the exact day. But what's happening in euro is you see that there's this pretty kind of deliberate offer side to it. Could be profit taking in nature, but it's still going lower. So if you're walking in as a day trader, you're going to have a bit of a different mindset in euro dollar than if you've walked in as a swing trader and held euro long over the weekend. If you've held euro long over the weekend, you have nothing but profits. If you walk into euro and you listen to all the hype, which is euro's higher, everybody's ecstatic, buy it, buy it, buy it, you're probably a little disappointed in the early part of Europe, the later part of Asia, as your euro trades off 100 ticks from the high. Because after all, if you buy into that euphoria and you started dealing right at the 5 o'clock open, that price is 920. All it did for the rest of the day was sell off. But you're able to diagnose it from a standpoint to say, okay, at what levels does a buyer or a seller actually maintain the control? And all you're going to establish is that early on in Asia, sell side at least held the resistance up near 930. Again, those are the only spots I'd be looking on a short term for sell side. Later on, as the day develops, you start looking at support points breaking, and then you're able to sell into them. But early on, all you're focused on is that sell side. So in trading the gaps, in trading that gap movement lower, you're still looking for a very couple key things to establish, which is, do you establish some support zone? Well, look, this first support level, this first little level before 5 p.m. New York time, it gives way. The open, it gives way. What level doesn't break? Right, the 840s, they give way. What level doesn't break? The 820s. 820s is the first level that holds. It's the first level that holds. So that becomes the support that you start to look against, right? That's the only kind of support you see intraday that you start to work against. In terms of resistance, the top level of resistance held, the breakdown level of resistance held, and then you had this kind of consolidation bottom edge that held. So it gave a tradable zone all day long, but not one of which you could just have been a euphoric long-only trader. So it's a little different than S&P. Now, when you're talking about trading the gap in the S&P, let's look at the S&P 500, the E-minis here, and look at the gap in the S&Ps. A little bit different. Still had a gap higher. So S&P gaps from 23.45 up to 23.65. So 20 points higher. Now, S&Ps actually go and hold their gap open lows. It held it all day. Hasn't broken it. Held it all day. And what does it do at the top? It starts to establish above the top. So what you can say about the S&P is that buyers held and buyers pushed it through resistance. The opposite was said about euro dollar, right? So no different than the euphoria in the whole equity market and in currencies. You still have to trade what is in front of you on that day. And so why gaps get so challenging for the short-term trader is because it's tough to look away from the standpoint of, wow, euro yen gapped up several hundred points, right? Euro yen, as I speak, it's 3:54 New York time. Euro yen's trading 119.21, 170 points off best levels of the day, but 200 and a quarter off of the close on Friday. So there's a very different viewpoint by somebody that chased the momentum and bought into near the highs versus somebody that took the profits of a swing type trade. And so you really have to define where you're looking at it. But in trading the gaps, it still makes a ton of sense to understand what levels get established. And it makes a ton of sense to give some patience to the market and let it establish those levels before you come in chasing it, right? At this stage of the game, when the S&P opens, I mean, it's straight up. 65 to 73, almost 73, straight up. You don't have any support to really work on in that stage of the game on a Sunday night. But if you're patient and you allow it to work, what you come across is in early Asia and into early Europe, you started to get this support zone that sellers couldn't establish below. Then all of a sudden that zone starts to make a lot more sense. That same level was tested kind of mid-morning U.S. time, right? 11:30, you get European close. The same level was tested, and it was the same reaction. As late afternoon's closing, you're getting a different reaction, which is you aren't rotating back to the highs anymore. But in terms of looking at the gap, I think you still want to approach it on what levels are making sense that day, because gaps have a lot of opportunity to pull back and even close their gaps while the sentiment is still going to be very positive. So handle it with care. I hope you guys are doing well, and cheers, and we'll talk to you tomorrow.